Hey guys, it's Mark here from the ETF Tracker Show, and this is week 15 for the week ending the 29th of October for Exchange Traded Fridays. So it's all about what's happened in the news. It's delivered as a newsletter. It's also here on YouTube if you're watching this, and Spotify if you're listening, and hopefully the sound is coming through better. I'm monitoring it over here on the side on OBS Studio. So it seems like the levels are a bit better. I have this new mic arm and I had it way too high before. You can clearly see it over here, the microphone, if you're watching it on YouTube. But yeah, I'll figure out a better way at some point in time. I don't really mind it, sitting there. Kind of looks professional, I think. Anyway, I hope you've got a great couple of weeks ahead of you as we head into the end of the year. But in the meantime, what happened this week has been all about Bitcoin type ETFs, but luckily there was less of that. There was more stuff in the rest of the news, but a week and a bit ago, so 2 episodes ago, we had the launch of some new crypto type ETFs here in Australia. And then during the week, there was also the launch of the first futures backed ETF on Bitcoin. So Bitcoin futures ETF. The second one has launched from Valkyrie. So the first one was from ProShares, and it set records for how much was traded on that. There was something like $440 million worth of trading volume in the first hour, 1 hour. So it just shows, there was a lot of interest there. But in any case, there is a bit of news still on the Bitcoin and ETF and blockchain type space with the new launch here in Australia. And we also saw some other types of ETFs in the news here. So we're going to talk about MOAT. And there's another ETF as well. I think it might be HACK and MOAT that we're looking at, as well as a new one from eInvest, and that is the Daintree Hybrid Opportunities Fund, so DHOF. So we'll take a look at that. But anyway, if you are looking at this, please do like, share, and subscribe before you go further. And we're going to get to my screen and take a look at what is going on. Okay, so what I've got here, this is the newsletter. It's still in preview mode because it actually does not go out until Friday morning. You might be listening to this already, but we are preparing this, I guess you could say, on Thursday evening, Thursday afternoon. And what you can see here is this is the newsletter. So I'll just zoom in a little bit here. Now, we make this available on the website. So you still get an email if you're subscribed, and there's some other details in the email as well. But you can actually see the latest copy as well as back copies, so older versions going all the way back to July when we started doing this. But yeah, this is week 15. And as I said, there was a second listing of a Bitcoin futures ETF, this time from Valkyrie. And even though it didn't do as much volume as the BITO one from ProShares, which set that record volume, it's over 1 billion now. I think it hit 1 billion in its second day. It was nearly 1 billion in its first. Valkyrie was the 14th largest. So it just shows that it's still quite a popular asset class. Maybe they might make a special category for that, like the crypto and blockchain type ETFs there in the US. And then we also saw another blockchain filing, so the third one here in Australia. So there was an announcement by BetaShares about CRYP. Then there was a listing, and so CRYP is going to list on the ASX. There was FTEC, a fintech and blockchain ETF from ETF Securities, and that is listed on Chi-X, so that is trading. There was another one that launched today, and that is DIGA from Cosmos. So we'll take a look at those ones there. And then we'll dive into some HACK and MOAT ETFs. And then also this week, before we go further, we featured a re-interview with experts. So it's the first time we've had a guest come back. And there's plenty of people out there that we could interview. But we had a question on market making, and we had that market making episode a couple of weeks ago. But people wanted to know more about the primary and secondary markets and how the two are intertwined and how that works in the ETF world. So check out this episode here that I did with Kevin Feerick. It's short. It's just 7 minutes because it's basically just the one question. But this was, well worth it. So take a look at that. What's in the rest of this newsletter? It's all about the local articles, global articles, ETF videos, ETF podcasts, tweet of the week, chart of the week, some ETF education, and some links back to ETF Tracker. So now let's get to the local articles. So this first one here is from the AFR, and it's all about specialist ETFs and how they can spice up your index portfolio. And so in this article, Tim Mackay shows that ETFs are not just the boring index, passive tracking investment vehicles. They're that's pretty synonymous with the industry, as he talks about, but there is also quite a few other ETFs that are out there that follow different styles. You call them thematics, or they might follow certain sectors rather than just the broad-based cover everything in a S&P or NASDAQ or ASX 200 type ETF. There's much more. And now we're seeing these blockchain and Bitcoin type ETFs. So if you thought ETFs were just about the boring, then this article will help you bust that myth. So let's take a quick look here. And so we can see, so Tim's a contributor there, talks about some of these, what people have thought is just basically boring type ETFs, passive investing. And it still is for the most part, but you can get specific with that passive investing or active. There are also active ETFs. So don't just think it's all about passive. There are these nuances there. There's much more passive than there is active, but it's, still quite an interesting and growing market. So the things that we look at here, there's things like cybersecurity, e-gaming, cloud computing, robotics, artificial intelligence, semiconductors. And in the US, there's the Bitcoin futures ETF, and we'll certainly see more now that the floodgates opened up for crypto type ETFs. And they also talk about healthcare, biotech ETFs as well. I think there's just one biotech ETF on the ASX when I looked at that, because I was doing some categorization. I could see there's quite a few. There's maybe 3 healthcare ones and biotech, and it's like, should I include that as part of the healthcare play? Doesn't really fit anywhere else. So I think I've done that. So it's the boring core versus the exciting satellites. And if you're interested in core versus satellite type investing, then especially for ETFs, that's typically the way it's done. So boring being the core, you buy the ASX 200 via A200, IOZ, or VAS, or one of those other ones. I think one of those is like ASX 300, but you get my drift. So you have one of those broad-based, or maybe a couple of those broad-based. It just depends on what the percentage is that you want there. And typically, if people are a bit more risk-averse, they'll have a larger weighting to that core type as part of their portfolio. And then the satellites will make up the various other things, the thematics that we just mentioned above. So yeah, it's all about doing your homework. Bit more expensive than standard ETFs if it is that thematic style. It's not just tracking a wide kind of index. There's a bit more nuance to that, and probably a bit more management that's required. So it does come with a bit higher fees, but just because the fees are higher does not mean that you need to avoid it, because if it makes up for it in terms of the growth of that ETF, whether the number of trades or the fund growth or the inflows that are going there or performance, that fee that you might think is high compared to others, maybe it makes up for it in other ways. So yeah, it's just important to look under the hood. So that's that first one there. Another one, back to the Bitcoin, so we can't avoid this one. Australian firms line up to launch inevitable local Bitcoin ETF. So they talk with Alex Vinacourt from BITO Shares and Heath Benke from Hold On to get the investment manager opinion on this. And it does seem like regulation is going to be required. There's already an ASIC paper that's out called CP343, and that consultation paper, CP, is something that they put out to the market earlier in the year, I think mid-year, and they've had quite a few responses to this about how they will go about and do that. And it's quite good that the regulatory bodies will put out these consultation papers. Even the ASX that I used to work for, they would put out these consultation papers and still continue to do so for things like when they had CHESS replacement. So if you're a retail trader, you'll know about CHESS because that's all to do with your HIN, your holding identification number. So yeah, all of this kind of stuff that is going on, these regulatory bodies will put out these papers. And so hopefully by the end of this year, we'll see some more movement there from ASIC, and some feedback on that, and some hopefully there'll be some roadmap towards when we can actually see some listings of Bitcoin exposed. So right now we've got blockchain exposed, so ETFs that buy into companies that have either the picks and shovels or they're buying crypto themselves. So there's that indirect exposure. And so yeah, that is something there. So in this article they talk about more about Bitcoin and the explosion that it had a couple of years ago, and more people calling for an ETF on these major cryptocurrencies. So it might not just be Bitcoin, Ethereum, and all of these other kind of cryptocurrencies there. So I talked to Alex Vinacourt. So he is chief executive of the $20 billion BITO Shares ETF provider. So probably a lot of you have BITO Shares ETFs. I do. in some of my portfolio as well. And so he says here that at the moment we're seeing some stats in Australia that well over 1 million Australians own an investment in cryptocurrencies directly. We do think that over time we'll see Bitcoin and hopefully other cryptocurrency exchange traded funds available. So that's his comment there. And they've got CRYP, which is blockchain related, that we will see when that is released. So they're probably going through the process now, but you can register your interest if you're interested in that. And then Heath Benke, MD over at the Innovation Focused Fund Manager Hold-On, said he expects an Australian Bitcoin ETF could be launched by mid-2022, with Hold-On hoping to be one of the front runners in launching a fund when possible. We've spoken to another front runner there. I would think that there would be a front runner in Monochrome Asset Management, and Jeff Yu, who was former CEO of Binance Australia. They've got their, they've responded to the ASIC CP343. They've also put out in the news that they also want to launch a Bitcoin type ETF. They've got a good pedigree over there and a great research center too. So make sure that you check that out. I think there was some news on LinkedIn as well that they've just been able to appoint KPMG as audit manager for them for that fund. So that's an important step. And, all these ETFs they have, or even funds, they have an auditor on each of these. So we saw that in the US when there was, getting closer and closer to seeing something launch in terms of Bitcoin ETFs, that some of these names that were out there, whether it's Invesco, ProShares, all of those were, when it was, I can't remember which one, but one of them appointed an audit manager as well. So it was a good sign over there. It's led to some positive things. Let's see what happens here in Australia, whether it's for Hold-On, Monochrome, or any of these other ones. So worth a look. Take a look at this Sydney Morning Herald article on that. Now back to a quick one, which is the Motley Fool looking at 2 excellent ETFs for ASX investors. They take a look at HACK and MOAT. And these Motley Fool articles that talk about these ETFs, sometimes it's one, sometimes it's two. In this case, they're just short and sweet, so it's not like the in-depth. You can search for more details online. There's plenty of information, whether it's Morningstar or Track Insight or just via the news. You can see a lot of this, or watch AusBiz for some videos, and we're going to take a look at that later. But in this case here, they just talk about some of the high-level stuff. So what are the names in HACK? Well, some of the names: Cloudflare, Okta, CrowdStrike, Accenture is there as well. Cisco, what's in MOAT? So MOAT's got names like Amazon, Berkshire Hathaway, Intel, Kellogg & Co., the cereal makers, McDonald's, Microsoft, and Philip Morris. So you've got some of that detail there. And if you want to look into things further, then you do have to go elsewhere. But it's worth highlighting here. What I thought we'd do, just while I've got you, is to look at HACK and MOAT just quickly on ETFtracker. So you might be in this situation where you see Motley Fool or some article from wherever it could be seeking alpha, or it could just be in the news. It could just be like mates talking at a barbecue, or you might just see something on Instagram or TikTok talking about ETFs. And if you are interested in looking at what's going on under the hood, so each month when the ASX and Chi-X datasets come out, what we do is actually throw up into this app here. So as soon as it comes out, we get a notification and we'll load it up into our app. So there's a little bit of turnaround time. But you've got this menu here on the ETF Tracker app, which I'm on. I can go full screen. Cool. Okay, I can still see myself on the screen here. I was wondering if it might get rid of me, but that's fine. You get to still hear me if you can't. You've got 4 options here. The market overview, which is just a dashboard of what's happened in September. Then there's ETF analytics, which is more about like details of each of the measures that we track, whether it's transactions and size and performance, but for the whole of market, then you can filter down. In that one, we've got ETF snapshots, which is just picking a single ETF, and we'll just take a look at the trends for that ETF. And then we've got search ETF holdings, where you can do some comparisons or even search for the underlying holdings. You might be looking for Facebook and which ETFs have Facebook in them. So you can do that kind of stuff there. We're going to go to the snapshots and take a look at HACK and MOAT there just quickly. So I believe it was HACK and MOAT. Let's just double check. Okay, so we'll go back here, HACK and MOAT, that is the ones. So we'll open her up here and let's go to HACK. And what you see here is 6 tiles, which show you, first of all, there's returns, next is size, then there's transactions and tradability, quality, and costs. And so let's start backwards here. And what we can see here for HACK is the costs were initially in 2017 low at 0.47. It did increase to currently where it's at 0.67%, but doesn't make up for it. So has it increased its cost, but you've got no further benefit? And that's certainly not the case here. You can clearly see that in terms of returns, it's been increasing over time. Yes, it had a negative month, as most ETFs did in the month of September, but it had been rising before that. You can see here that we've got, so each of these tiles, we just choose one of the metrics to represent size or transaction. There's actually underlying further metrics there. But net inflows is one of the ones that we choose to look at for size, and we can see that that's been quite strong each month, nearly 20 million or over 20 million that is being traded or coming into this particular ETF. Transactions, it has been increasing over time. So it's not like it was popular before or like popular more recently and then it's waned off. It is increasing, and you can see it hit a record month, nearly 8,000 trades in the month of September. So even though it had a negative month in terms of performance, people were still buying and selling this one. So take a look at that. You can see here that in terms of tradability, there's liquidity and there's also the bid-ask spread, and we can see that the spread has been decreasing. If you want to look at more of this kind of information where available, you will be able to click on this deep dive. You can click on the expand button to do the deep dive, and we can see here that whilst we had the cumulative returns on that front page, we can see the breakdown by month. So it's had a few negative months here, but it's more than recovered. 1 month cumulative going all the way back to the start of 2017. It's nearly 100% in terms of returns there. And this total returns takes into account distributions or dividends being reinvested there. So that's HACK. Let's take a quick look at MOAT while we're here. This is a free tool. You can take a look at this to view any other kind of ETF. So similar returns here, 92%, 93%. The inflows, the latest was just over 20 million, which is similar to HACK. It's also been increasing in terms of transactions, and let's take a look at that one. We can see that there's actually number of trades, there's transaction volume and transaction value. So we can see more information there on that. You can also see the cost here, 0.49%, so it's a little bit cheaper than the other one. And liquidity is 7.7%, the latest liquidity that it is, and its spread has been going down. You want to see the spreads going down and liquidity being quite high compared to peers, because high liquidity and low spread just means that it's easily traded. And you've got the distribution yield here, and neither of these really had much in the way of distributions. Let's just make sure that it was HACK. So nearly 1% for MOAT. For HACK, it's a little bit better for HACK. Its average distribution yield has been higher before in 2019, 2020, 6.2% over this time, but it's 3%. So it's still higher than MOAT, but still. So that's worth a look at there. So you've got this article here from Motley Fool, and if you want to deep dive into it, you can go to ETFtracker and take a look at the free tools there. It's monthly data, so that's the caveat there. If you want more daily up-to-date information, we've got in our resources page up above, there is a Google Finance link. If you click on, hover over resources as a menu, and you hover down a little bit, you'll see some Google Finance link there, and we've grouped together different different ETF groupings to make it easier for you to compare. So that's that one. AFR, back to them again, and the Bitcoin miners fund floats amid crypto ETF race. And so in this article, it's about a new ETF listing that's also blockchain related, just launched today. It's the Cosmos Global Digital Miners Access ETF. And they talked to Dan Annan from, he's the CEO over there. He's formerly of BetaShares. So I remember seeing him on LinkedIn, and he was there at BetaShares as a director. And now in the news, I didn't notice that he'd moved across. So he's now got this Cosmos Global fund. So it has listed on Chi-X, and this is the third that we've heard of. It's the second listing, but it's the third because CRIP was announced and FTech was listed on Chi-X, and now we've got DIGA. So we'll take a look at this one. In this article, he talks with Alex Vikovich there. There's Dan, and they talk about the type of ETF that is here. So Cosmos itself is owned by Mawson Infrastructure Group, an Australian-born NASDAQ-listed Bitcoin miner. So it's got its pedigree there in doing something like this. And so the fund's largest holdings include Riot Blockchain, Marathon Digital Holdings, and Hut 8 Mining Corporation. So very much on the mining side of things. So it just launched today. We'll keep an eye on how this one is going. And yeah, worth a look there if you're interested in this. Dan's former shop, Beta Shares, launched CRIP, or they've announced CRIP, so we'll wait for that one to launch. It's still got coming soon on the website there. And so that's those articles there, and we round out the local news by looking at what's gone on with ETF Securities in their weekly report. So this is for the week ending the 22nd of October. And per their report, so we just take a look at what they've said here. They said the global equity markets edged high last week. Oil continued its strong streak and silver performed well. The best performer over the week was ETF Securities Physical Silver, ETP ETP MAG, that was up 3.7% in the week. And then it's the Van Eck ESPO ETF, that's the video gaming and esports, that was up 3%. The worst performers was an ETF Securities one for physical palladium, ETP that was down nearly 6%. And then there was also the Beta Shares Resources sector, QRE, that was down 2.7%. And if you want to get access to the PDF, click on the links here. So we pull it all together. That's the whole purpose of this, to try to make it easier for you. You can download this ETF monitor. So this will download a PDF and you can look at performance and inflows and more information there. Okay, so back to the articles. That finishes off the local articles. Now we'll go to global. And so the first one here is, well, first of all, before we get further, it really is all about the Bitcoin type ETFs. That's what is in the news. You know, we don't make it up. This is just what's being reported. If you want to search for yourself, look up ETFs and just see, you know, what comes up. It is Bitcoin, maybe blockchain, bit of crypto, but yeah, Bitcoin is there. So Bitcoin's true believers in this Bloomberg article scorn ETFs while welcoming validation. In this article, we see that the true crypto enthusiasts are not flocking to buy the shares of the Bitcoin linked ETF from ProShares. So that launched last week, and as we said, it was over $1 billion. Data from Vanda research shows that retail traders didn't do as much of the record trading volume that was seen in the ETF, which reached over $1 billion in FUM in its first week. So if it wasn't retail investors buying it, then it's going to be the instos. Okay, so whether it is hedge funds or family offices or the pension funds, or what we call superannuation here in Australia, buying it, that's what it was being seen in terms of the people that were buying over there. So there was talk about the BITO, and now that we've got Valkyrie, I think it's BTF that they've got there as the second Bitcoin futures ETF. It's not, I think it really helps the institutions be able to buy it, but there are still many retail investors who, perhaps because they're not as familiar with the apps or they don't trust it as much, it's not a demographic thing necessarily, but for whatever reason, if they haven't gotten into Bitcoin but they've been interested in it, this is a more regulated way of buying exposure to that kind of stuff, whether through the blockchain related ETFs or directly via Bitcoin futures. So that is now more available for retail investors, and yet a lot of the buying wasn't really from retail. But that makes sense, because retail, like, we've got a lot of money, but not as much as the pension funds and the institutions that are over there. So anyway, that's from Bloomberg. Take a look at that one. This one from Crypto Slate is Bitcoin futures ETF is so popular that it's breaching future limits set by TradeFi. So what is this all about? In this article, they talk about how the futures product BITO had a limit of 5K, and 1.7K was left at the time of this article. So we'll take a look at this. There's a limit on the number of futures contracts that were allowed here. We'll cancel on that one. Okay, so I've probably hit my limit here. I did read the full article before. Maybe if you try it, you'll be able to see the full article. But yeah, it's based on the number of contracts. They were going to increase it after October in November to above the 5K. But it seems like early in its trading, it's already near that 5K limit. And this might have been actually hit. So this was on October 23, so just on Saturday. So it might be over that. But they did talk about in the article, when I did read it initially, that they were going to increase that limit earlier, okay, just because of the sheer popularity and demand. Now, this one here from CoinDesk, Valkyrie's ETF debut soured by falling Bitcoin market. It is soured here, but I did read something as well, or hear about it, that it was the 14th largest ETF launch. So even though it was soured, and even though it wasn't as popular, it didn't have the 440 million in trading as a first comer to the ETF markets, but still it's the 14th largest. And when you consider how many ETFs are in the $1 trillion market globally, that is definitely something. Okay, So in this one, talk about timing. Valkyrie's own version of Bitcoin futures ETF was not as great as rival pro shares as the price of Bitcoin fell to 60K. It's now at 58K. So I saw some news. I think it was overnight. The price fell from its highs, and so it's been a rocky kind of week for Bitcoin, but if you're a long-term holder, then it shouldn't really matter too much, should it? But we'll see what happens with those futures contracts that is being tracked. So this is an important one for investors to know, that it is tracking futures contracts and the movement in that, which effectively should lead where the market is for the price of any kind of asset. When you look at futures in the non-Bitcoin world, the futures do lead where the market is likely to head, but we'll see how that goes here. So yeah, it's an article just talking about how it launched and it didn't see as much kind of movement up in terms of price, but we'll see how that looks in a couple of weeks. And then the last one, which is not Bitcoin, but it goes back to something we thought that was kind of dead in the water, which is SPACs. And it's this Bloomberg article talking about tiny pop culture disruption ETF is winner thanks to Trump SPAC. This article talks about the simplified Vault pop culture disruption ETF, which rose to highs of 47% on Friday, as its biggest holding was Digital World Acquisition Corp. It's merging with former US President Donald Trump's new media company. And so whilst many thought the world of SPACs was dead, even including me, it's been reignited with this latest news, and we'll see if this was a one-off or if there is a reignition, yeah, we'll get that word right, if it's been reignited. But yeah, just a short article here, and you can see that VPop's largest holding is Snap at about 19%, and then Digital World and Netflix at 10%. And so the stock, Digital World, shot up by as much as 284% to trade as high as 175. And this was on the 23rd of October. So yeah, that might have moved since then. Worth checking out if you're interested in SPACs. Okay, and now we are at the videos, and the first video here from AusBiz. And if you haven't signed up to AusBiz, make sure you do. There's a couple of links in this article here. And you can, when you click on these links, if you haven't signed up, you can probably watch a few seconds of these videos, and it will prompt you to watch by, the full video by actually registering. But it's free to register, so I don't know why you wouldn't, okay? Because there's a lot of great financial news. If you're interested in startups, I mean, they've got a lot of news on what's going on in the startup world as well. But in this one here, the guys talk to Brad Dunn. He's Perennial eInvest, and it's their new Daintree Hybrid Opportunities Fund, DHOF. So that is all about hybrids. And if you didn't know hybrids, you've got equities and you've got fixed income. So fixed income is a much kind of safer investment traditionally, whether it's corporate bonds or government bonds, but it is considered a safer type of investment. It doesn't have as much in terms of returns, but people put money in that because whilst it doesn't have these outsized kind of returns compared to a benchmark, it is considered safer. Whereas equities, you can buy the right types and you can do really well, or you can buy and it's just poor timing that you can't, choose whenever the market's going to go up or go down, and you just get hit by that. Hybrids sit in the middle, so they've got qualities of equity, the qualities of fixed income, and so this is a fund that looks at those hybrids. Okay. So in this episode, they have a chat about this fund. It's a quoted managed fund with an active strategy and market making, which ensures that the fund is trading at close to NAV, which is really important. So it avoids issues that you have in some of these unlisted funds that might not be trading at close to their NAV. So it launches next week. You can check out the video here and have a listen to what this one's all about and see if that's of interest. And this next one is where the investors are buying the ETF size dip. And in this one, they had Blair Modica from BetaShares talking about how investors were buying the dip in September, and it was 2.9 billion worth of inflows. And so we could see that in our statistics as well. And yeah, that's certainly the case. And that was quite a big month there for investors. So even though the market was down, you still, in terms of performance and price, you still had a lot of investors buying in. It did mean, though, that whilst investors were buying in because the prices were down and the product of both of those things leads to funds under management, we did see funds under management kind of hover at 125 billion. So it had been growing by like 4 to 5 to 6 billion each month. And then it was 125 in August. It stayed at around 125. It grew by about 200 million net in the month of September. We'll see what happens when we get the October figures early November. But yeah, that's just what happened there. So it just hit a little minor road bump there. But investors were still buying it according to the data and according to this video here from Blair. So take a look at that one. And this one here is as EV, so electric vehicle demand surges, get on board the lithium bandwagon. And in this one, it is David Lane from Ord Minnett talking about the Hertz Tesla deal, hitting the headlines, pushing Tesla market cap through the $1 trillion barrier, making Elon richer than whatever he was richer, as rich as before. So it's been really good for him. And David runs the ruler over the global EV market and its impact on lithium and how investors can participate. So worth a look at there. There's ACDC, which is an ETF that has lithium exposure. And there's probably other ways you can play that globally too. So take a look at that. And now the last video in this is something that we mentioned already, which the ETF Tracker shows week 11 short video on primary and secondary markets. You can see that video in the newsletter. We have it right at the top. But if you've missed it and you just scroll down to the other parts, we repeat it here. So you can take a look at that link and go directly to YouTube. And now we are at the podcasts. And the first one that we've got here, the only one that we've actually flagged here, I'll probably add a few more when the newsletter goes out. But this one was interesting. It's from CNBC's ETF Edge, one of our favorite podcasts. It's all about the Bitcoin ETF craze. And in this one, Bob Pisani, who's the host there of this show, he talks with Steve McClurg, the CIO at Valkyrie Funds, and Tom Lydon, CEO of ETFtrends. Take a look at ETFtrends. They've got great kind of articles, information, and statistics on ETFs there, so worth a look at too. But Steve McClurg, Valkyrie, as we had seen above, second launch of a Bitcoin type ETF. There's also others that are looking to do that as well. Kathy Wood's looking to do that. So her ARK fund is trying to launch their own kind of version of this and catch that trend. They discuss the world of crypto as more and more companies are jumping on the Bitcoin futures ETF bandwagon. So far, the new trend has really taken off. So how can investors get in the game? And how might they look to Bitcoin as a way to hedge against inflation? So they've also got a second portion of this podcast. They call it Markets 102. And each week they always do this. They continue their conversation with Tom Lydon about from ETFtrends, and they do some market education. They'll talk about something else going on in the market. But yeah, it's a really good podcast, so check that one out. I'll probably list another one from the guys over at The Compound. So that's from Reitholtz Wealth Management. Usually it's Josh Brown, Michael Batnick, and sometimes they have other guests there. So they have The Compound and Friends. But yeah, they've got quite a few different ones there. There was something that was quoted in an article on Seeking Alpha from Bill Miller, a famed value investor, about what makes him worry. And the guys at Equity Mates have mentioned this if you are following them on their Facebook group or Instagram. And it was also quoted by the guys over at The Compound in their Animal Spirits episode. So that was with Ben, and there's Michael Batnick as well. And they actually quote in the first few seconds, they talk about this Bill Miller quote. So it was very important what he had to say there. So take a look at that one. Now we're at the tweet of the week, and this one we flagged from the desk of Eric Balchunas on the weekend. He said that, what was it here? So not the weekend, it was earlier this week. It's perplexing to me that so many of my colleagues don't use Twitter, even ones who cover these companies. You just don't get this kind of in the moment shot. I'm going to think he said shot on LinkedIn. He probably said something else, but to your interpretation there. And he's right, you don't get this kind of talk between different famous company heads and investors as you do on LinkedIn. So we saw here ARK Invest, Twitter and Square, Tesla, and MicroStrategy. And who did we see? We saw Kathy Wood responding to a tweet from Jack Dorsey, who is the founder of Twitter and Square, co-founder. Elon Musk is there as well, and Michael Saylor. Kind of looks, fake, but it was real. And this was on Twitter, all these famed people talking about, I guess, being kind of macro tourists, as they say, having some sort of opinion there on macro. And Jack is definitely thinking that there is going to be hyperinflation. There's a lot of other people in the opposite camp. hyperinflation, look it up. It's not great. It's really been a downturn in many economies that have had this. Imagine buying, for example, one day your price of coffee is $4. The next day it is 4,000. That's hyperinflation right there. And I don't think we've hit that. I haven't seen that. Maybe there's signs of, trending towards something like that. But there'd have to be a lot more going on to see hyperinflation happening. So worth a look at these tweets. We include the link to the tweet so you can have a read of the comments there. You can even go back to previous episodes, previous newsletters that we've got and see what the other tweets have been. So worth a look at there. Now we'll jump to the chart of the week, and the chart of the week is from ETF Tracker. What we've done is look at the total return, the 1 month returns, and we filtered on Australian equity related ETFs only. Now, there are 55 of those that we count, and we filtered just for 2021 to see each month what was the average return for that group of 55. And it wasn't just 55 each month because ETFs delist, and then there's also new ones listing. So that number can kind of change, but there were at least 55 that we saw over the course of 2021 so far to September. And the average of all of those 1 months is what you see on the screen. So it was like nearly flat, kind of negative in January. It was 1.3% in Feb, then it went to 2.2, 3.1, 1.4%. It was 2.6% in June, 1.1% in July, 2.4% in August, and it fell to a minus 1.8% in September. But adding all of those up gives us just under 12% for 2021. To the same period, so from January to September in 2020, it was negative performance. So it was less than minus 5%. And then in 2019, it was actually over 18%. And it was different ETFs that were the constituents there. Some have stayed on, but there were some that weren't there. So we do take all of that into account. But you can just see that it's 12%, minus 5% last year to this period. It was 18% in 2019. We can go back further, 2018, 2017. But, these different kind of periods have different results there. So it's very hard to pick. But with ETFs, most investors are long-term and just riding these waves as they happen. Okay, so worth the consideration there. And now with the further ETF education, I thought we'd harken back to a great set of videos from the guys at Equity Mates and their Getting Started in Investing series. And this is episode 1 on ETFs that they did in conjunction with BetaShares. And per the show notes, it's they say here, ETFs for beginners, it's with BetaShares, and it's a series. It was 3-part series, helping you understand what you need to know about ETFs when you're starting your investment journey. They unpack all the key elements from the basics through the administration after you buy. And in this first episode, they chat with Ellie DeVere from BetaShares to walk through the basics. But then you watch part 2, part 3. You can listen to it. Okay, so there is the podcast where you can listen to it, but you can also watch it. So there are videos that you can see on the Equity Mates YouTube page. So worth a look at there. And that's it. That's it this week. That's the end. When you get to the end, you can either go directly to the ETF Tracker app where we looked at HACK and MOAT, and you can look at other things as well. You can go to the ETF forum if you've got questions or you want to see what other people have been talking about. It's mostly me, but I do get some questions privately. Then I'll just post them up there. There is a section on video reviews that we've done. So if you want to add to that list, please do. If you want to check out more of the ETF Tracker podcast and videos, you can see the YouTube and Spotify link here as well. And if you are going to sign up to Ausbiz, I reckon you should, because it's free. Who doesn't want free stuff, right? But you can go directly to our page. So we've got an experts page. There's many other much smarter people than me out there. I just play around with the data, and just present it. And, that's our skill there, but it is valuable, I know. But if you're interested in those data talks that we do, whenever there is new data coming out from the ETFs on the exchanges, ASX and Chi-X, you can go directly and you can click follow, because that'll come up in your notifications page whenever we do some updates. So worth a look at there. But yeah, that is it. Thank you very much for your time. And we hope you have a great weekend. If you're in Queensland, I know it's Eka on Friday. So hopefully you're not wasting your time, listening to this. You're out there enjoying. But if you do get some time and you're interested in the world of what is happening with ETFs locally and globally, then yeah, give this a thumbs up, like, share, and subscribe, whatever platform you're on. We will see you next week. Thank you very much for your time. I'm Mark. Take care. Bye.